to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of November 24th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was a good week for Delaware mortgage rates. The bond was able to recover and move Delaware mortgage rates slightly lower. If you take a look at the bond chart on the screen, you can see we were on a downward trend there, but when we hit the floor of resistance, mortgage bonds were able to rally off that, move higher, but they were capped by the blue line there, which is a ceiling of resistance. Stocks moved higher last week, which also put a lid on bonds. So we're going to recommend floating your Delaware mortgage rate to start the week, hoping to see if the bond can push through that blue line of ceiling of support, of resistance, and move interest rates lower. Now, if it hits it and bounces lower again like the trend has been, we would quickly switch to a locking stance because it could sell off back to the bottom of the channel that it's been trading in. But right now, recommend floating your Delaware mortgage rate to start the week, see if we can break through that blue line and get lower rates. Now, if we look into the economic news, we did have a reading on inflation last week, which was the Consumer Price Index. The Consumer Price Index, the CPI. That measures inflation at the consumer level. There's two they look at. There's the headline and then there's the core. The headline remained exactly the same, 1.7% year over year. The core did move up slightly to 1.8%, but both of those are below 2%, which is the Fed's target rate for inflation. Shows inflation's very tame. That's good news for mortgage bonds. Now, the Fed's personal favorite for inflation comes out this week on the 26th. That's the personal consumption expenditure, the PCE. That's what they watch and that's what they gauge their policy by. So we'll see what happens this Wednesday on that report. And then Thursday we saw the release of the weekly initial jobless claims, which came out at 291,000 claims, higher than the expected 284, but still well below the 300,000. This is where we need to be in order to keep the labor market recovery going. Got to be below 300,000. Now, this claims that we got last week, that's going to be the week that they use to calculate jobs report for November 2014. So based on this weekly initial jobless claims, we're expecting over 200,000 jobs will be created for November. Now, in other economic news, the European Union's central bank's president, which is Mario Draghi, announced that the bank would begin their own asset purchase program. They'd purchase up to 1 trillion euros. That's very similar to the Fed program that just ended QE3. So they're going to purchase asset-backed securities, hoping to stimulate the economy and help the European stock market. So on that announcement on Friday, the European stock market and the U.S. stock market both rallied. And then in housing news, existing home sales for October 2014 jumped 1.5% from September up to 5.26 million units on an annualized basis. That was the best level since September of last year. And then the median home price moved up to for October 2014 to $208,300. That's up 5.5% from the previous year. So that's a very sustainable year-over-year home price increase. That's right around the historical average. So that's a good sign for existing home sales. Now, there was a couple reports on new home construction. The first one was the National Association of Home Builders Housing Market Index for November 2014 increased to 58. So that was a nice rebound from the low of October was 54. So we did bounce back up to 58. That measures how well the builders are feeling about the home construction. So anything above 50 considered positive. So 58 is a very strong reading from home builders. Now, the next report from home builders we saw was another good report. Building permits for October 2014 rose by 4.8% to 1.08 million units on an annualized basis. That's the highest number of building permits since November of last year. But housing starts for October 2014 did fall by 2.8% from September, down to 1.008 million units on an annualized basis. But for our purposes, it wasn't a bad report because it was the multifamily that brought the report down. If we just look at single-family housing starts, they were up 4.2%. So that's great news for our housing market because we're really not dealing much with multifamily. In the local news, the next free first-time homebuyer seminar is Saturday, December 6th in Dover, Delaware from 10 a.m. to noon at the Dover Holiday Inn. And then the next one in Newark is Saturday, December 13th at the Christiana Hilton from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office, 302-703-0727, or register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.